Thanks for joining us here on Question Time at Alhambra Investments. This is where CEO Joe Calhoun answers the questions you pose. And Steve Brennan is the one who keeps track of all that. So, Steve, what have you pulled out of the stack today?
Yeah, well, we've got Fed Week today, the modern day equivalent of the Oracle at Delphi. They will be looking into data we do not get access to, having brilliant insights to see the future, and continuing to perform on their great track record. Although I have to say, Joe, saw some comments from you that seemed a little heretical, that you might be questioning their brilliance, their insights, and the magic at work at the Fed where they can divine the future, maybe even suggesting that they just take averages of data in the past and just extrapolate it into the future and often get things wrong. Come on, Joe, that can't be what's going on. The theater's too good here.
Well, I think you stole all the thunder there, Steve. It was a pretty good little rant you had there. Well, look, it's a Fed week, so everybody, last week, and actually, and a lot of, I think what's going to happen this week was priced in last week, and it's going to be interesting to see if what was priced in last week actually happens. I've said many, many times that the market is the best glimpse of the future you're ever going to get, and it's wrong a lot because the future is freaking hard to see. So. Last week, especially on Friday, there was a big move in the Fed funds futures market where it looks like the market's pricing in now. Okay, let's go and look, because this morning it was growing. The odds of a 50 basis point rate cut at this September meeting are now 61%. Now, last week at one point that was 30%. So the odds have doubled in the last week that they're going to cut 50 basis points. Look. It always astonishes me that people believe that that if the Fed cuts 50 basis points in this case, that everything is going to be fine. But if they cut 25, then all hell's going to break loose. If they don't cut 50, by God, we're going to have recession. But if they cut that extra 0.25%, then we're okay. That just doesn't make any sense to me. It just really doesn't. I mean, if the economy is so close to recession that an extra 0.25 point is the thing that keeps it out, yeah, come on. I just don't think the world works that way. I would actually posit that the Fed manipulating interest rates is actually mostly for show. I've said this many times, the Fed is a follower. The market moves, and then the Fed confirms that move. And in this case, where the Fed talks so much incessantly, we know what they're going to do. We know they're going to cut. And there were some, last week we get this tweet from Nick Timiraos. He's the so-called Fed whisperer at the Wall Street Journal. Supposedly he's the guy that they call when they want to say something to the market. But they can't because they're in a blackout period, which is where they are right now. They can't talk to the press. I don't know if that's true or not. Maybe he's just playing off of that. Maybe Nick Timiraos likes the attention. I have no idea. But he did write a book called that basically said, hey, the Fed saved us from a certain disaster during COVID, and so maybe they like the guy. Whatever the case, I don't know. If they were trying to communicate something last week, whatever it was, hey, we think we're going to go 50. If they do, they do. If they don't, market probably sells off a little bit, by the way, just because they built in that expectation. If it's not met, then there'll be some selling. But you think about that for a second. It's like, I'm going to sell stocks because they only lowered rates by 0.25% instead of 0.5%. It really doesn't make any sense. And I can tell you for sure that it doesn't make any difference to the economy. Look, I was doing some checking this morning. No particular reason why. I was just looking at mortgage rates. We look at them all the time. One of our kind of thesis here is that as mortgage rates come back down, or as interest rates come back down, we're talking about commercial real estate, whatever, then you're going to see a lot of the things that have been kind of weak in the economy on the good side of the economy is going to start to pick up because you're going to see housing market activity pick up. We know those things are related. When people move, they have to buy things. They have to do things. They, buy a new washer. They buy a new dryer. They have to put in a new air conditioning system, whatever the case may be. And in fact, I will say, I was looking at mortgage rates because I might need one. not for a long time, but for a short time. We're actually looking at moving within our town because we've wanted a horse property. In our town, if you have an acre in the city limits, you can have a horse. And so we would like to do that. And so they don't come on the market very often. Those things are kind of unusual. And one came on the market and we went and looked at it. Well, I don't have enough cash on hand to buy it outright. I'd have to do something with a bridge loan until we get our other house sold and so forth. So I said, well, what are mortgage rates? Well, I can get a 15-year mortgage right now for 5%. And I don't know that people really know that. We know that the 30-year is at 6.25, maybe 6.5, depending on who you're going to. I suppose you might get one closer to 6, depending on the circumstances. But you can get, I saw 15-year mortgage rates this morning online for as low as 4.75. So I was surprised by that. So my point is that mortgage rates have already come down. The Fed's going to cut. If they cut, they're just confirming what they've already told the market they're going to do and what the market has already priced in. Mortgage rates have already dropped 150 basis points at least from the peak last October. They didn't drop just because, I don't know, because they wanted to. They dropped because there was a reason for them to drop. They're expecting the Fed to cut. The inflation has come back down. Mortgage rates are elevated relative to the 10-year anyway, so you're compressing the spread. There's lots of reasons why mortgage rates are going to come down. My point is, if you're waiting on the Fed to see the impact on the economy, you're waiting too long. You're behind the curve. What the Fed's going to do this week on Wednesday is already in the market, and it's already having an impact on the economy. So I don't really care what they do this week. They'll do whatever they do. And there's the next meeting. By the way, just so everybody knows, everybody talks about, oh, there's the election coming in, but they shouldn't be doing anything this close to the election. Well, I personally don't think they should pay any attention to the election. I think they should do what they think they need to do. Whether I think it has any impact or not really doesn't factor into that. They should do what they think they need to do to meet their mandates. And just so you know, there's a meeting this week. Obviously, there is no meeting in October, and the meeting in November is the day after the election. So there's no reason, I don't think, why if you do something in September that you can't also do something in November. It'll be after the election anyway. And then I think there's a December meeting, and then we'll see what they do. The market's looking for about 3 rate cuts by the end of the year, a total of maybe 75 basis points. We'll see. If we get 50 this week, maybe they don't do anything in November and they do a quarter in December. I don't know. I guess my bigger point is people focus on this stuff way too much. It just, I think about this all the time. The economy. People tell me, oh, well, it's not a free market economy in the United States. It's all these, too much government intervention, all these things. I'm talking about my free market friends. There's other people who are telling me the opposite, telling we need more intervention. But in general, the economy is pretty free here. And what that means is that it adjusts to whatever the Fed does, to whatever Congress does, whatever happens on economic policy. The market and the economy always adjust. And I don't think that matters all that much what the Fed does. It matters somewhat more, I suppose, what Congress might do from a regulatory or tax standpoint. Those things do have an impact. But I think people way overemphasize this stuff. I don't think it makes nearly as much difference as people think it does. The economy is this big beast that does what it does because it's a natural process and it just happens. So listen, don't waste a whole lot of time. I'll put it this way. The one thing you don't want to do this week, here's my advice for the week. Do not watch Jerome Powell's press conference because it's a waste of time and the dude is boring as hell. And people are going to ask him stupid questions and he's going to give stupid answers. And if you want to know how, what you need to know, see what the market's doing after he gets done talking. Don't listen to him. Just watch what the market reaction is. That tells you all you need to know. So anyway, have a good week. Don't fret about the Fed. They're going to do whatever they do, and we're going to keep chugging along and doing what we do.
So, Joe, I'm going to call the Fed, tell them they need to consult you before they do these stupid things. So for those of you viewing, we want you to participate in all this. Put your questions in the comment section down below, and we'll get them to Joe.